All right, let's dive right in. Salesforce just dropped their Q3 earnings report, and honestly, it is a blockbuster. They've posted some absolutely massive, record breaking numbers, and it really looks like their huge bet on AI is paying off big time. So, we're going to break down exactly how they pulled this off. Okay, just look at this. This one slide from their investor presentation pretty much tells the whole story, right? You've got record revenue, cash flow that's just soaring, and a super optimistic forecast for the rest of the year. I mean, the numbers are huge, and literally every single arrow is pointing up. So you have to ask, what in the world is the engine behind all this incredible growth? So here's our game plan for breaking this all down. First, we'll look at those big headline-grabbing numbers. Then we're going to dive deep into the AI engine that's really making it all happen. After that, we'll see what this all means for profits and for investors. And to wrap it up, we'll check out their forecast and see what they think is coming next. All right, let's kick things off with the big picture stuff, the main highlights that really define this quarter. These are the top-line figures that got everyone talking. So, first up, let's talk revenue. Salesforce pulled in a staggering $10.3 billion just in the third quarter. That is a new record for the company, and it's a 9% jump from the same time last year. Just incredible. But, this next number, I'd argue it's even more important when you're thinking about future success. We're talking about nearly $30 billion in what they call CRPO, or Current Remaining Performance Obligation. Now, I know that sounds like a bunch of financial jargon, but it's a super important metric, so let's quickly break down what it actually means. So the easiest way to think about CRPO is like this. It's basically the company's order backlog. It's all the money from contracts they've already signed that they know is coming in as revenue over the next year. It's a fantastic sign of predictable income and stability. And seeing an 11% increase here year over year, well, that tells you they have an incredibly strong pipeline of future business. And look, this isn't just about promises of future money. The company is an absolute cash-generating machine right now. Their operating cash flow hit $2.3 billion. That's up a very healthy 17% from last year. This is what proves the business isn't just growing, it's also running super efficiently. Okay, so those are the massive, record-breaking results. The big question is, how? How did they pull this off? Well, the answer comes down to just two letters: AI. Let's take a look at the engine that is just supercharging their growth right now. And you don't have to take my word for it. CEO Mark Benioff made it crystal clear. He said, and I'm quoting here, "Our Agentforce and Data 360 products are the momentum drivers. These are their big AI plays, and they are the core of their growth." He's really betting the whole company's future on this idea of the agentic enterprise. Basically, it's a future where smart AI agents are working for you, behind the scenes, making everyone way more productive. And wow, do the numbers ever back him up? Get this. The annual recurring revenue from just those core AI products, it exploded by 114% year over year. It's now at nearly $1.4 billion. I mean, that's not just growth. That is straight up hyper acceleration. And it's because customers are adopting this stuff at lightning speed. We're talking more than 9,500 paid deals, a 70% jump in the number of customers actually using these tools. And that's just this past quarter. And here's a wild stat. The system processed 3.2 trillion tokens. Now, a token is just a piece of a word that the AI uses to think, basically. It's a massive amount of AI work happening. And it's valuable because half of all the new AI bookings came from existing customers who are coming back for more. They're doubling down. And if you need one final point to really hammer home their dominance in this space, think about this for a second. Nearly 90% of the top 50 AI companies, the ones ranked by Forbes, are running their own businesses on Salesforce. I mean, come on. When the leaders of the AI revolution are using your platform to run their company, you're doing something right. Okay, so this growth and this AI leadership is all super impressive. But what does it actually mean for the bottom line, for the investors? Let's take a look at how all this success translates into actual profits and real returns. So it turns out Salesforce is operating with some incredible profitability. Their standard by-the-book GAAP operating margin is a very healthy 21.3%. But If you look at their non-GAAP margin, which kind of gives you a better sense of day-to-day operations by adjusting for things like stock compensation, it's a massive 35.5%. You can really see their intense focus on profitable growth is paying off. And they're not just hoarding all that profit, they are passing it directly back to investors. In this quarter alone, the company returned $4.2 billion to its shareholders. Billion with a B. And here's how they did it. The vast majority of that, $3.8 billion, was used for share repurchases, basically buying back their own stock, which helps boost the price for everyone who still holds it. The other $395 million, was paid out as a direct dividend. It's a really powerful 1-2 punch, showing their commitment to shareholder value. Okay, so no doubt about it. The quarter was a massive success. But what about the road ahead? Let's jump into our final section and see what Salesforce is forecasting for the rest of the year. Well, it's one thing to meet expectations, but it's another thing entirely to raise them. And that's exactly what they did. They've bumped up their guidance for the entire year. We're talking higher revenue, higher earnings per share, and more operating cash flow growth. When you see a company do that, it signals a huge amount of confidence from the management team about what's to come. And you know what? That confidence is totally well-founded. It's built on that super strong, AI-driven performance we've been talking about. And it's also getting an extra boost from their recent acquisition of Informatica, a big data management company, which will just add more fuel to the fire. So let's just do a quick recap of the key takeaways here. First, record results. A record-breaking Q3 with a super strong pipeline for future work. Second, AI is the engine. Agentforce and Data 360 are absolutely fueling this explosive growth. Third, strong profits. We're talking high operating margins and a ton of cash going back to shareholders. And finally, a confident outlook. They're so confident they raised their guidance for the full year. When you really look at it, Salesforce's quarter is just a powerful case study in the incredible transformative power of AI. And it kind of leaves us with a much bigger question to think about, doesn't it? As this technology gets woven into every single part of a business, are we looking at a future where to be a successful company, you have to be an AI company first? It's definitely something to chew on. Thanks for joining me for this breakdown.